Hey Paul, how are you?
I'm good. How are you? How's holidays?
Holidays are great. I'm here in Keystone enjoying cold.
Oh, that's good. I'm here in meteorologically challenged Southern California, where there's neither cold nor rain nor anything else. So
So
it feels nothing like Christmas, but it
you,
is. So
you're in a place that is neutral.
I'm in a neutral place. So I guess I should do some introductions in here somewhere. So I'm Paul Kedrosky, angel investor, lapsed venture capitalist, lapsed Wall Street guy, blogger, also senior fellow at the Kauffman Foundation out of Kansas City, which is nowhere near San Diego. And who are
And
you?
I'm Brad. I'm Brad Feld. I'm a venture capitalist who invests in software internet companies. I'm based in Boulder, Colorado, although we invest all around the U.S.
So we had an entertaining what would I call it, a little project together recently, or maybe we should talk a little bit about it, where we decided to write something together for the some place called the Wall Street Journal.
Yeah, I think I'm really. It's interesting at two levels, right? I mean, one is, and for those of you that don't know us, Paul and I just wrote an op-ed about something we're calling the startup visa. And sort of one level of it is the specific content and topic, which has really picked up some steam. But the other is also sort of the dynamics of our relationship, which is one where, it's very collaborative. We've definitely worked on a handful of things, but we don't spend much time physically together. So,
Yeah, yeah,
I
and
know,
it's fun. It's funny, we one of the first times we ran into each other, and I think this speaks a lot to sort of the way that backing into the whole discussion of investing in the web and everything else. The way the relationships have changed is that I actually thought the first time I ran into you, and I don't even remember where it was, but somewhere in the last few years, that we had actually met before. And of course, the answer was we hadn't. It just feels that way because through this kind of back and forth of blogs and Twitter and everything else, that you start to feel like you've run into people before.
well, you have. I think the cliche is intimate ambiency, right? I mean, we know
Yeah.
each other a lot better than we do, but then by definition, we know each other better. So,
Yeah, so
it's fun. So the startup visa thing's really picked up speed, and I just got off the phone with another writer at the Wall Street Journal who's working on a piece, hopefully that'll run in the next couple of weeks that adds on to our op-ed. So I'm gonna hook you up with her
all right.
later today.
And I mean, the genesis of all of this, and I mean, credit where credit's due, has come from a bunch of different people who've all been thinking about, the same issue, which has to do with the role that immigrant entrepreneurs played in the U.S., historically, but also, more recently in Silicon Valley and Boulder and in many other places. And how that's, in a sense, and I, we kind of said this in the op-ed, but the idea being that, we couldn't do too much more to make it more difficult for people who want to come to this country and create jobs, and that doesn't have to be that way.
I think that's right on the money, and the idea came from Paul Graham, who wrote a blog post that was called just Founders Visa, and made a good case for more immigrant entrepreneurs in the U.S. and how that would stimulate economic growth. And I experienced it firsthand this summer with the TechStars program, which is one of the programs that I'm part of running out of Boulder. And in that program this summer, we had 2 of the 10 TechStars teams were actually comprised of immigrants. One was a pair of Canadians who, as you know, are really dangerous.
Dangerous. They're all masked along the border, I always point out to people.
The most dangerous thing about Canadians in my book is how much they can drink.
It's like the old saying, my hockey team has a drinking problem. Well,
Yeah.
my drinking team has a hockey problem.
He has a hockey problem. This Jewish kid from Dallas cannot keep up.
That's right. There you go.
So that's thing one, and then team 2 was a team from the UK, and both of them wanted to stay in Boulder after the summer. They were here on temporary visas. And we spent time this summer trying to figure out how to get them to be able to start the companies here. And there was just no way to do it. I mean, we spent real time, real effort with lawyers, with immigration lawyers, and, just no easy solution. And I think, when it's always been something certainly that I've been exposed to and I've whined about plenty in the past in terms of not enough, immigrant visas for H1s for companies, H1Bs for companies that, were trying to hire people, or every now and then you run into the problem somewhere else. But until you really get it in your face and you realize that it's people's lives that are being messed with, and these are people who are going to create companies that are going to create lots of jobs in the U.S. that are sort of the engine of what makes us great.
And they can do it, and they can do it increasingly anywhere in the world. And the idea that, and this came up in the conversations leading up to the startup visa, and it's come up in other conversations since, the idea that we should wait, let them establish their company somewhere else, and then invite them to come here when they have enough money to set up in the U.S. just doesn't work anymore. I mean, once they've set up somewhere else, they're going to stay wherever they are. They're not going to gravitate to the U.S. just because it's just such a lovely place to come and run the company. It'll be wherever it is. And so the opportunity to get them here and grow jobs and grow the economy is now. And so putting anything in front of people at this stage is frankly crazy.
Yep, totally agree.
So, and I think the funny thing, and I think worth pointing out without turning this into sort of an immigration reform discussion, is that the immediate response many people have to this idea of a startup visa, they have at least two responses. One is this idea that, what about fraud? And the other one is, well, what about the existing visas that are out there, like some of the EB visas that currently allow people to come into the U.S. on an employment basis? And I don't know which one's easier to deal with, but I mean, with respect to the existing visas for employment coming into the U.S. assume that you have, as a 23-year-old, Eastern European with a computer science background, they assume you have $1 million in the bank account, which may be true, but it's highly unlikely. They make a bunch of assumptions about what young entrepreneurs have and what they can do that just aren't realistic.
Yep.
And the fraud issue. Go ahead on the fraud issue, but I mean, you've had to deal with this one, I think, more than I have with Washington. So,
well, the fraud issue is the hot button that everybody pops up, first, and it's one of those things where I think there's relatively straightforward solutions for gating, the visas and for qualifying people, and I think people should be focused on the other side of it rather than focusing on the fraud issue. I think we should focus on, how do we get more people into the country that are qualified to start these companies? And, on the margin, there may be some ways, to gain the visas in general, but that's true for everything in life. And, the bad actors wash out of the system eventually. And so really the focal point should be on, how do you do this in a constructive way, with appropriate hurdles that are well vetted, et cetera. But when you sort of think about it logically, it's pretty straightforward. So I think the fraud thing ends up being a red herring, but it's an easy one for people.
It's a really easy one. And not to belabor, but I also think it's, in a weird way, it's kind of a high-class problem to have.
Exactly.
I mean, if we have so many people coming in and so many people setting up companies that we have the luxury of worrying about whether or not this one or that one is slightly better or slightly worse, that's not a bad problem to have. So.
All right. Well, we solved the visa problem. What else is
immigration solved? Moved on. Did you see, by the way, did you see speaking of op-eds, I had a thing that I near and dear to both of our hearts about what's going on with early stage technology and what's going to happen in 2010. But I had a thing on TechCrunch yesterday where I was talking about this idea that maybe in 2010 we'd see and I think it's a bit of a flyer, but I think we'll see a real ramp up in the number of IPOs. We've seen, the IPO business, initial public offering business in technology, which drives so much of sort of wealth creation and venture capital, has been, in a word, dead for about a decade now. And, for a bunch of reasons, including a host of really interesting companies, some of which you're invested in. I think 2010 could actually be a really interesting year and see the return of the tech IPO. And you think I'm completely mad or onto something here?
No, I think you're onto something with, but I give it a nuance, right? So when I started my first company 25 years ago, the IPO was a mythical thing that every entrepreneur wanted to achieve, right? So the aspiration of every startup entrepreneur was to take a company public.
Yeah.
And I'm involved as an investor in a number of companies that, purely based on their financial metrics, could go public. I mean, from the standpoint of what today's hurdle rate for a public company is, and in all cases, the entrepreneurs actually have no real aspiration to be public anytime soon. They're not interested in being young, newly public companies. They want to only be a public company at the point where the company is unambiguously successful and dominant. In its market, extraordinarily profitable, And essentially the IPO is a last step along the way rather than an early step along the way. And so it's an interesting mindset shift among many, especially experienced entrepreneurs who have been through public companies before, because of all of the hurdles that have popped up, not just from Sarbanes-Oxley, but disclosure and filings and regulatory environment, and the way the public markets work and the way the investment banks work, and just all the bullshit that you have to deal with. Versus if you're a private company that's growing quickly, you can just spend all your energy growing your company, doing something that your customers want and are delighted with, and building a real business.
So I buy that. I think one of the ways it could play in, though, is that leaving aside, we can talk names if we want, but I mean, one of the ways that I think it's kind of interesting that you may see, to the extent that we start seeing a little bit more openness in the capital markets about even some of the companies you talk about who are legitimately there going public, I think it gives them negotiating leverage. One of the problems that existed over the last 5 or 6 years was, I'm an investor in an early stage company and someone comes along and wants to acquire my company. And I look at it from the standpoint of an investor and I say, well, what other options do we have? Well, we could run it out and continue to see where we go. We could look for other offers, or we could, that other option, which used to be, or we could take it public, really didn't exist. So just having that as a stick to beat people with when you're negotiating in the context of trying to work out a potential acquisition of a company now, I think, favors the industry, because now all of a sudden I can say we do have other options. I don't have to necessarily take this buyout offer, and I could in theory potentially take this thing public.
I think it's right on the money. We actually had this play out 3 times in our portfolio in 2006 and 2007. There was a window, public market window, that really closed pretty abruptly in 2007, but that was open, probably for about 24 months for what had become mid-stage profitable tech companies. And we had 3 companies that were all on a path to going public. Postini, which was about to file an S1 when they were acquired by Google. Danger, which had actually filed an S1, and then were subsequently acquired by Microsoft. And then Sling Media, which was acquired by EchoStar, and as part of that, they were in the process of closing a late-stage financing and had, sort of bankers saying, no problem for a Q1, 2000 or Q4 2008 IPO. Which, of course,
stuff happened in there, right?
Yeah, something happened in Q4 2008. And in all 3 cases, the acquisitions were done for cash at very attractive prices from both an entrepreneur and investor perspective. Everybody was very happy. And I think it was true in all 3 of those cases that the potential of an IPO was healthy in terms of creating valuation pressure. Right. It was also interesting that it's leverage, it's negotiating leverage. I mean, your negotiating leverage in any sort of transaction needs to be real, right? If you're posturing and bullshitting the potential acquirer and they call you on it, that's a stupid position to be in. So the potential that you have a profitable growing company that you can take public is good. The other thing which is really interesting is clearly the IPO dynamics are such that there is sort of life before you file, life between the time that you file and you go public, and then sort of life as a public company. And I've been involved in a number of IPOs, in the late 90s through the internet bubble. And boy, life as a public company, when things are struggling, is just no fun.
Well, yeah, and that goes back to your point earlier, though, that this idea that the aspiration of every early stage company, still remains this idea that it was even 15 or 20 years ago that they had to go public. I just think I think you're spot on. I think that's changed, and it's changed in ways that favor the entrepreneurs, that they have other options, and there's a lot more awareness that, if I go out there and I'm public, that's not necessarily a party. I mean, I think back to companies that, I was an analyst in the 90s, and I was following a host of public technology companies, and they had to deal with me, day in and day out, and then deal with institutional investors day in and day out. And I know a significant number of those folks desperately wish they were private. So, be careful what you wish for.
It's very interesting. It's very interesting. I mean, I hear a lot of people sort of, around the entrepreneurial system, venture-backed entrepreneurial system, sort of bemoaning the lack of IPOs. And sort of my view, and I think, I know it's shared by some of my good friends, is you focus on just building your companies, building great companies, and building substantial market leaders. And there will be ebbs and flows in the macro environment. At the point at which you can take companies public and windows open up, if you have really strong, durable companies, they'll get valued well, and you'll be able to have nice public companies.
Yeah.
And if you have weak companies, you can be guaranteed that there'll be plenty of investment bankers that try to take those public if the markets get frothy. And as a VC, your aspiration should be to be an investor in really strong companies. Well, so focus on the thing you can control.
For sure, but I mean, I also think, and maybe this is a little bit it's worth knowing, though, about how the industry works, is in a sense, you're kind of a greengrocer, right? I mean, when the window opens up, if and when it does, you want to have product for sale. The worst position to be in as a venture investor is if an IPO window opens up, or an exit window, let's just call it that, opens up, and you don't have stuff on the shelves for sale. It's like being a grocery store, and the doors open up, there's people outside, they come racing in, and they all want stuff, and you just don't have it, or you only got a couple. And so, the position that's kind of interesting is that I don't think venture investors have ever had more on their shelves than they do right now. And so, this idea that there could potentially be any kind of an exit window open up, I just have to imagine has people in a complete frenzy that, oh my gosh, this could save 10 years of terrible results if I suddenly manage to squeeze a bunch of things out over the next 18 months.
Yeah, I think those conversations have been going around for a couple of months now within the venture circles, within, anybody that has a large portfolio has done their rounds of, here are the companies that we want to see if we can get, we can get on a track to going public. And you're starting to see a steady stream of filings. I think there's going to be an awful lot of filings in Q1, and that's good. I think it begs a deeper question. I think your analogy is a good one, and one of the dynamics around venture capital is that it's a long-term investment cycle, and that you can't necessarily time the exits. There do, having now done this for a while, there do seem to be cycles with differing periodicities, and the biggest thing that I find sort of contradictory amongst a lot of VC investors is that they end up chasing things, whatever those things are. They chase the cycles, they chase the segments, they chase the hot companies. Oh my God, there's an IPO window coming up. We got to go invest a lot of money in a bunch of things because an IPO window is coming up. And it just seems illogical. It seems like a better strategy, at least the strategy we take, and it's played out well, is be deliberate over a long period of time about how and when you're investing in companies. And so, our strategy is invest a steady amount of money every year, a roughly equivalent number of new companies every year at roughly the same stages every year, and let them mature over time.
I watch so many people fall into this trap, though. I mean, it's exactly right of saying, there's going to be some opportunity to get exits coming up, so I should, and the worst thing yet, I should raise a fund. Or look at what happened back in 2000, the peak year for limited investors, the investors in venture funds to make allocations to venture funds was precisely at the peak of the market, and it was them saying, look at all of these companies that have exited over the last few years. I need to have investments in venture capital firms who in turn invest in these companies that are going public. And it was a disastrous time. It would have been much better off to think in sort of smoothing this out. I need a consistent allocation of this stuff, and then boom, this giant tsunami of capital falls on the venture business. And, we can talk about this too, but in some ways we're still trying to live through the consequences of, you have a great quote, I think. What did you say? It was 10 years, it takes 10 years to kill a venture fund. It's taken 10 years to kill off the problems we created in 2000.
Yeah, and interestingly, it's no different probably in the venture business than it is in any other area of financial investment, right? You have these groundswell of activity where all of a sudden everybody says, "Oh, I can make fast and easy money in that area."
Yeah.
And so everybody runs to the area where they can make fast and easy money. And what my dad told me when I was a little kid, which is there's no such thing as fast and easy money, plays out because maybe a few people get lucky. But overall, it's sort of, for whatever period of time, it creates a dynamic around it. So I think, in a lot of ways, in 2001, 2002, it's very interesting. I remember probably 2002, 2003, everybody said, "Oh, the venture industry is dead. It's going to really massively correct. All of these excesses are going to change, whatever." And the fallout from that is now happening and has been happening for the last year or two.
But it has been. But what's amazing, I think, to most people, and this is really important, is that how long it takes. There was no, it was naive in many ways for people to think that 2 years after the bubble burst, that funds that were raised in the 99-2000 timeframe were suddenly just going to disappear because we wished them all away because it was embarrassing to have them around. It doesn't work that way. These are multi-year commitments that large investors make to venture funds, and it takes a period of years to make these embarrassing things go away. It doesn't just happen because we wish it would happen.
Yep, I think it's really well said. And the structure of venture funds as an entity is that they're minimum 10-year lives, and you invest over a 5-year period, and then you support your investments beyond that. So I think understanding the tempo of whatever the vehicles are is important. Interesting thing, sort of when you look back, is the venture funds that consistently invested year after year through that time period and had a strategy. Didn't chase the latest hot thing, didn't throw money at stuff, but were deliberate, are the ones that today many people talk about as the great legacy funds, old funds, as well as the great up and coming funds. And interestingly, a lot of the venture capital investors who raised new funds, formed new partnerships post bubble, take those lessons to heart real clearly. The Union Square Ventures and Spark Capital guys.
Well, you're like I always ask people, if they had to guess when was the most successful time in the 20th century to create a bank, and of course it was 1934 during the middle of the Great Depression, because the banks that were created then, there was lots of talent around, and the people who formed them had a lot of scar tissue from what had most recently happened. And I think very much the same sort of thing in what's happened in the venture industry is that many of the most, I think, successful partnerships will be the ones that were formed, as the prior, the .com episode, fell to pieces, and a lot of partnerships fell apart afterwards, and sort of people reformed afterwards and created some of the new funds, some of the ones you've named. And, these are the people who've got the scar tissue and, desperately don't want to fall back into the same traps that they did before. Giant partnership, massive amounts of money under management, billion-dollar funds. That just isn't going to happen.
Yeah, I think the other side of it, which is probably equally important, is that, anybody that's gone through and been in this business before and through the bubble and after the bubble, developed a point of view in a lot of cases of what they wanted to do with their lives. And you see a lot of early stage VCs and a lot of the people in the super angel category, that do many, many angel investments. They just love helping create companies.
Yeah.
And, the financial reward comes from being really good at it. But the driver is, the love of working with entrepreneurs to create new companies and to drive innovation. And I'd put myself firmly in that category. I mean, the success measure is the financial outcome, but the satisfaction is really in the creation.
Yeah, no, I totally agree, and I mean it's one of the reasons why I take so much pleasure in dealing with so many sort of nascent, early stage stuff. I mean that's where all the fun is, and everything else kind of flows from that. But I mean there's this whole kind of memo out there, and I'm sure you've seen it the same way I have. That, and I've been part of this. I mean I argued this past summer in a paper by the Kauffman Foundation about the venture capital industry, really needs to be rehabilitated, and I argued at the time that in terms of at least investment outlay, it probably needed to shrink by about half. And everyone acts as if this is some kind of anathema. It's terrible for the U.S. economy, and it's the end of sort of entrepreneurship as we know it. As I always like to point out to people, all that would do is take us back to where we were in a somewhat more normal time, inflation adjusted, which was prior to the .com episode. And equally importantly, we have this kind of and I see it all the time. I see it when people come up and talk to me about venture and early stage investing. There's over-aggrandized view of the role of venture capital and venture investing. It's a service function, like law, like accounting, like something else that's really incredibly important to certain companies at certain points during their growth. But this is not some universal thing. You don't get anointed an entrepreneur just because you raise venture money. And by the same token, not every growth company needs or wants venture money. I looked at the Inc. study, or Inc. data a few years ago, and something like among the fastest growing companies in the U.S., so just as even a subset of entrepreneurial companies, it was still less than 1 in 5 of those companies ever took venture money. It's not because they couldn't or wouldn't or whatever. They just didn't need it. And so, it's important, I think, sometimes we get preoccupied with this whole idea of that, it's either venture capital, uber alles, or it's venture capital industries destroyed, and there's nothing in the middle.
Right. Well, I think the other, the other part of that is that, except for, a relatively brief moment in time, venture capital wasn't a growth industry.
Yeah.
Right. I mean, it was, when I started my first company, people, it was a cottage industry. It was, a very niche corner of the universe that had disproportionate impact. I mean, some very large companies come out of venture-backed investments at very early stages, and that continues to be true in terms of driving force of innovation. But I'll use my firm as an example. At Foundry Group, we have, there's 4 partners, and all of us have been doing this for a while. And our aspiration is to turn out the lights in 20-something years when we're done. We have no aspiration to grow. We have no aspiration to build bigger asset groups. We have no aspiration to go to all 4 corners of the globe. We know what we're good at. We know what we love to do.
Right.
And if somebody, I get, on a regular basis, how do I get a job at Foundry Group? I want to come work with you guys. I want to intern. I'll work for you for free to learn that, it's not what we do.
It's not what we do.
Right? And so
there's a great quote. There's a great quote on that I probably told you before, but and I just love is the idea that venture capital isn't a career. It's something you do after you've had a career.
It's a good line. It's a good line.
I mean, if you don't have the scar tissue and you haven't been beaten up and you haven't panicked on a Sunday night because the payroll's coming and you don't know how to make, and your core competency is Excel spreadsheets. I mean, what are you bringing to the? It's great, the enthusiasm's great, but it's just not what's needed. That sort of stuff is everywhere, and that's I think what people miss. And your point about turning out the lights in 20 years because you guys know what you're good at and you're going to do it and then you're going to stop, and this isn't about asset accumulation, is a kind of a principled approach to this stuff that is a little bit gone missing. And these are the kinds of things that as we talk about restructuring the venture industry and what's going to happen, and I talk to a lot of limited investors, what they would like to see, that's the kind of stuff people are, I think increasingly talking about is, sort of self-limiting partnerships, smaller sizes, fewer partners, negotiated management fees rather than having them tied to assets, so you don't have the same incentive to create massive funds that really can't, go out and do the kinds of early-stage economy-changing investments that we'd really like to see early-stage investors doing. And that's what's, to my mind, and I mean, there's a much longer list. Those are the kinds of things that are overdue and should happen.
Yep.
So, you don't want to flip over to maybe another subject here, which I thought would be useful to people. And you kind of talked about it a little bit on the way in, but what do you think? There's this kind of sense out there, I think, as well, that a bunch of the incumbents in the venture industry, we don't have to name any names, but there's a real leadership change going on. And you talked about some of the funds, Foundry's one, and First Round. I'll make enemies by not naming them all, but there's a long list of funds that have kind of emerged over the last 10 years that in some ways, to me, I think it's hugely energizing watching all these people emerge, not because I want to see the incumbents, fall apart and disappear, but it feels to me like we're seeing, a real leadership change going on in the venture industry. Do you think that's happening?
Yeah, I think that there's a couple of layers, right? I mean, I think there's some really great VCs who have been VCs for a long time, incredibly successful in some incredibly successful firms, and they continue to provide really good leadership and stewardship of the money they invest in, the types of companies they invest in. But like many things, people evolve. I mean, time passes, and sort of the idea that venture fundamentally is an apprenticeship type model where you just have to do it, and the best way to do it is at the feet of somebody who's really experienced. Over time, in any apprenticeship model, the younger people become, I'll categorize it as middle-aged, right? You become more experienced, and you start to take the leadership, and the people who have been in the leadership position, become whatever it is, emirati or whatever. I'm reading a fascinating book right now called The Giver, which is a kid's book that my assistant gave me, that she had her son read recently, that I'll write a blog post about. But sort of the notion is that everything's generational. I mean, we're humans, we die.
Yeah.
Right? Life is a fatal disease. And so
right.
you almost by definition have to have this evolution of talent, generational talent in whatever area of whatever. And so I think you're now seeing a bunch of people in the venture business who have been in it long enough or have been entrepreneurs sort of through a couple of cycles who love creating stuff at the early stages, who are acting as, entrepreneurs and leaders in the venture business. I think they're very comfortable. That group is very comfortable being public, very comfortable, aggressively supporting the entrepreneurs. We know that, the essence of this is the entrepreneur, not the VC.
Right.
And it's also, the category of people who entered the venture business in 1999 and 2000, all of the MBAs who hadn't really had deep experience, all of the lawyers, all of the investment bankers, the really, really good ones made a transition to being excellent venture capitalists, but the vast majority of them went and either washed out or moved on to a different, quote, career, because as you said earlier, it's not a career. So I do think you're seeing, a bunch of people who are putting a ton of energy into this industry. And as you said earlier, the best time to start a bank was 1934. I'm going to use that.
Oh, yeah, it's totally true. I mean, it's amazing.
It's the cliche that it's a great time to invest is a good cliche. I think it's always a great time to start new companies. So whatever.
Yeah, I mean, failure's a wonderful thing. So, maybe just a couple of quick things we could sort of touch on before we sign off. I mean, I was saying I give this talk all the time where it sort of amazes me that every conference I go to, they always have the inevitable presentation about what a VCs want. And I mean, and it starts to, quite honestly, when I'm on that panel, I think I more often than not now just become mischievous and mess around. We would like our beds made. I'd like have dinner made at home and so on. I mean, it's really interesting on one level because we keep having this conversation, and after 15 or 20 years of sort of professional venture capital, sort of, we've been 30 years now since 1978, and sort of we brought in institutional investors. Why are we still having the same conversation? So my answer in part is, and apologies to John Gray, it's this idea that entrepreneurs are VCs are from Mars and entrepreneurs are from Venus. And in some perverse way, part of the problem why we continue to have these same debates and same conversations, and why in some ways the relationship can get really unproductive between entrepreneurs and VCs, is that they have totally different ideas, to the point where it's literally like a husband and wife talking past each other sometimes. I always say that, when an entrepreneur says, at a board meeting, we're launching some new features today, and what do you guys think? And the VCs around the table think that the entrepreneur actually wants to hear their opinion, and what he's really doing is kind of like whenever your spouse says, does my ass look fat in these jeans? They want you to say
those are the nicest pair of jeans I've seen in a while.
Those are the nicest pair of jeans I've seen in a while. Whereas
actually, that's not even
the opposite. So.
Yeah, that's not even a good one. You should say, man, those jeans look almost as great as the last pair of jeans you had.
So there you go, much better. But I mean, to me, and maybe this isn't an unsolvable problem, but this whole idea just speaks to that something people need to keep in mind as you're thinking about what entrepreneurs do. Entrepreneurs are passionate people who are incredibly focused on solving a problem and almost overconfident about their ability to solve it. And VCs tend to be people who are, maybe if they're from an ex-entrepreneurial bent, they have that same passion. Maybe they come from a more quantitative point of view. But it shouldn't surprise us that these people constantly talk past one another. And in a weird way, worrying about what a VC wants is frankly irrelevant. Worry about what the market wants. Worry about anything, but don't worry about the VC is not your customer.
So two things. One is I completely agree with the last thing you said. And even more importantly, I find the vast majority of those panels to be tedious, and as a result, the fun part of the panel is, as you said, to be mischievous or just to pick a fight, not an aggressive fight, but a fight that at least spices it up and teaches people something or exposes people to a more human side. I think part of what happens is gets split into two pieces. One is there's this sort of disproportionate mythology around venture capital. When I say disproportionate, the mythology is of a greater extent than sort of appropriate. And, some of that's promulgated by VCs and some of it's promulgated by entrepreneurs and some of it's just in the ethos. I think the other side of it, though, is exactly what you said, is that the VCs who have been entrepreneurs, some of them do a great job of walking in the entrepreneur's shoes, and some of them are absolutely abysmal. And it's pretty bifurcated. I mean, you have, these some of my peers who have been entrepreneurs are so unbelievably tone deaf about what the CEO is struggling with.
Right.
And the idea that as venture capitalists, your job is to try to help that CEO in the way that the CEO needs help, not in the way that you think you should help him.
Right. It's back to does my ass look fat in these jeans? I mean,
yeah, and the experience curve also for even really successful some really successful venture capitalists who don't understand how to engage in a conversation. It's personality.
Right.
You have a lot of that. So then I think sort of layered on top of all of that nonsense, sort of is this idea that that there is some answer. And there isn't. I mean, this shit is really messy. I mean, starting companies is messy. People are messy. Everything that we're dealing with is messy. And so, the idea that in 30 or 45 or 60 minutes you can tell people the truth, it's kind of silly.
No, it's there's a great, a mutual friend of ours, Dick Costello, who's at Twitter now, has a great quote, but it's all about wandering down as quickly and as serially as you can down a bunch of dark alleys so you can figure out that it's a dark alley and find the one that's paved with gold. I mean, it's an iterative, messy, and unpleasant process, but it is what it is. And pretending it's anything else just, I think, you can chalk up to naivete or, misplaced optimism, because it isn't. It's all about, walking down those paths. And if you can't sort of speak to someone having walked down those paths yourself, then you get into this whole Mars-Venus, problem. And that's where a lot of, I think, the dysfunction kicks up.
Yep.
So... Anyway, anything else we should talk about?
Well, I have a question for you, given all the time you spend thinking about the macro. And I spend no time thinking about the macro.
Right.
When I was a little kid, my dad said, "Focus on 2% of the world and go after that." So that's what I do. But I'm curious if at the macro level. I mean, we're finishing off, what I think is at least from my perspective, synthesizing a little bit of data, I can synthesize a pretty confusing year. If you were president, from an economic perspective, what would you do right now?
So, I mean, it's we've been actually talking a little bit to folks on exactly this issue, and I mean, one of them obviously is exactly the proposal that you and I made together, and to retoot our own horns here, is I think there's such an easy win from minor immigration reform related to getting more immigrants into this country, because it's almost become so obvious that people forget, but this country was built around immigrant entrepreneurs, and it's how the whole show works, is bringing in the kinds of people who are hungry for success, have some of the intellectual tools and desire to make it happen, and want to come to a place where, the U.S. is among the easiest places in the world, rated one of the easiest places in the world to create a company. And it's also, and this is incredibly important, people miss it all the time, it's also one of the easiest places in the world to kill a company, which, may sound crazy, but one of the problems in many areas around the world where these entrepreneurs come from is that it's too hard to kill a company. So if I create a company, the liabilities that company creates as a legal business are on my neck for the next 20 years. Well, I don't want that. When I end this company, I want all the liabilities to go with it. And the U.S. is a winner on both fronts. It's easy to create companies, easy to end companies, which is, the business of entrepreneurship is many things, but most importantly, it's about this kind of evolutionary churn. So we can promote more of that evolutionary churn, and what I would do is I would drive it by, this kind of immigration reform we've talked about. On the flip side, I see some honest attempts to do other things, like, for example, the Congress now the Senate is actually trying to push through some reforms for driving the creation of more science parks. I would do so much less of that, like a reasonable approximation of zero. There's so many what seem like obvious wins, and they're so vestigial and such old world thinking that, entrepreneurship, like this conversation, it's virtual now. So many of the teams I work with are all around the world, and even if they're in the U.S., they're spread out all around the country. Office space is kind of this crazy afterthought that sometimes people don't even think about till they realize, everyone else we know has an office, maybe we should have one of those. And so, driving ourselves away from worrying about that kind of thing. I mean, the last thing I always say, and I was just in Brazil a year or so ago talking to them about this exact same issue, and it's the same advice I would give to the Obama administration. What should we do to drive more entrepreneurship? And they got fixated on venture capital and all this other stuff. And I said, no. I said, what you really want to do, I mean, venture capital is a service function. It'll show up when the entrepreneurs are there. Is I said, you want to find people. You want to find the entrepreneurs. you want to promote them. So you want to make sure that everybody hears the story, because entrepreneurship is viral. It's contagious. It's kind of a positive H1N1. When people see other people succeeding at being entrepreneurial, they see, I'm at least as smart as that idiot. Why are they being successful at this stuff? And well, I could do the exact same thing. So people go out and it's contagious and they do it. So what we need to do more of in this country is finding people, promoting their success so other people can get motivated by it, and then, quite frankly, getting the hell out of the way.
Well said.
So,
well said.
There you go.
All right. Well, look, it's 1:30 on my side. I'm hungry, and it's almost time for you to go have lunch. So let's
time to go surfing.
Let's go. Let's go have lunch together apart.
Together and apart. Super. Have a great holidays, Brad.
All right, Paul. Talk to you soon.
Okay. See ya.